Welcome. This is Bert Dohmen with today's chart analyst, where we will be discussing the weekly chart of the S&P 500 ETF. Weekly means that each vertical bar right here, as you can see, these are 1 week of trading. So this chart goes back all the way to the crisis low of March 2009. On March 6th, we said start closing out short positions. We had made lots of money during that crisis for our clients. And then on March 9th, we said start buying because this market will go longer and extend much higher than even the bulls anticipate right now. And in fact, it even surprised us. And here we can see the big up move over the past several years, which certainly was surprising. But the up move was also accompanied by some very stiff corrections. Look at this one right here. These were 20% and more in some of the indices. In fact, I believe this one here, the emerging markets went down 30% or more during this correction, and emerging markets is where everyone was. And all the analysts on financial TV were telling you to be there. So you never want to be where the majority is. It's very dangerous because when they all want to bail out, where do the buyers come from? So we can see here an interesting pattern where the old high, when it's slightly penetrated to the upside, this generates a lot of optimism, and it usually then makes a top. This is the pattern that we've seen lately, and I believe it's the high frequency trading operations that are using this. They use false breakouts to trap the last bulls who didn't get into the market. And then you have a juicy correction. Here we said sell short because our indicators told us to do that. And on June 4th, here we said start closing out short positions. And then we got another nice rally here, going to a new high again, slightly higher than the last one, but that again generated a lot of optimism. We got sell signals here on our indicators, and we had a big decline into November 16th of last year. Interestingly, right here at the top, Apple had just made a new all-time high at $705. About 6 days later, we said that this was going to be an important top, and that Apple would probably decline strongly, and our first downside target was $520, which of course seemed ridiculous to many people at that time. It was like attacking the Pope when you attack Apple. But we did see $520 right here on November 16th. So our target was hit exactly on a closing basis. The intraday low was actually lower. So then we said we will have a rally in Apple. Right now we'll probably go to 582. The actual high was 589, so we're just a few dollars off on a rally high. And at that point we said, okay, Apple is not finished to the downside. We'll probably see Apple going to $422. We haven't quite seen that yet, but it's getting very close. So here we've seen another rally in the SPY, and again we made a new higher high by a slight margin. Now the index is up against this trend line here, which represents strong resistance. However, as we've seen in the past, there is a tendency to break through, and I believe we will break through briefly, very briefly, to the upside, and that will be the top. And after that, you can expect another stiff correction. What's even worse right now is that volume has been going down during this entire rally from late 2011. There's a rule in technical analysis that says price follows volume. And that's very logical because volume is a measure of demand. As prices get higher and higher, you have fewer and fewer people willing to pay those prices. And in this case, people means money managers. The average investor is really not a big part of the equation anymore. So money managers are getting hesitant to put more money into the market, and so eventually prices will have to come down in order to again attract volume. So we've seen these volume spikes here on the declines. This is when everybody starts to bail out of their ETFs, and so we're due for another volume spike right now. If you're long right now, you might want to take some money off the table. It would be a wise move. And if you're a short-term trader, you might want to consider some short selling. And this is what we do in our Smart Trader service. This is Bert Dohmen for today, signing off. Stay tuned for the next message over the next several days. This is the Chart Analyst.